I wanted to say that on behalf of Samuel Zand, our hearts and prayers go out to anybody and everybody that's impacted and affected medically, physically, emotionally, and et cetera. And clearly, we all have been impacted by this, and our hearts and prayers go out to everybody. And first and foremost, our prayers are for speedy and safe and quick recovery, and for all of us. And with that, I will turn it over to you, Shmuel Zand. Why don't you introduce yourself, and then I'll get back to the setup here.
So first and foremost, amen to your blessings. And it's crazy times, and a lot of people are hurting and struggling. And we all need godly intervention. We all need to have health and prosperity, and God willing, we'll get past this together. And thank you very much, Shmuel, for having me. It's an honor to be here, and an honor to be able to try to make some sense of everything that's coming out in blazing fast speed. And that's not so simple. And just by way of starting, I would say that the key word surrounding our lives nowadays is certainly uncertainty. And there's a lot of uncertainty everywhere. And that goes including in the mortgage industry in all respects, as well as with the CARE Act, with Governor Cuomo's enactments, executive orders, and with mortgage relief and what it means. So I'm hoping to explain in simple terms what things mean and what's happening with the mortgage relief, what the options are. But there are still many questions that remain unanswered, which is why we hope to continue to disseminate the information as it comes out. My background is since 2009, I'm admitted to practice in New York State. And at that time, my previous firm, Lowenthal Kaufman, hired me specifically to work on the modification programs that had just come out during the Great Recession. And there was the HAMP program, the Home Affordable Modification Program. And that was actually godsend for many homeowners who were facing the potential loss of their homes and loss of businesses and different things. And there were pros and cons, of that program. So some of the pros were that they were basically throwing out modifications. To define a modification, it's very similar to a refinance, where they restructure your loan, assuming you were behind on payments, and therefore your credit was obviously impacted and sometimes ruined. But that did not go into and does not go into account, at least for the majority of it. It's not a very important factor. And it was godsend because you could modify and get a better interest rate. And at times they would extend the term of the loan out. They would bring your monthly payments down. They would roll all the back payments in. That was the modification. And it was excellent. And like I said, it would reduce the interest rate. It would get people out of the foreclosure debacle. Of course, the negatives where there was no clarity and nobody knew what they were doing, which sometimes helped as well. And, because the banks didn't know what they were doing. So they were just giving out modifications without really having a sense of what the program was about and who could be eligible and how to be eligible. So I just want to end my introduction by saying that in more than 10 years of fighting for homeowners' rights, thank God we have not lost a single home for any of our clients. Now, I don't say that to toot my own horn by any means, and it's 1000% all from God. I happen to be a messenger of God in this, that's how I look at myself. But the point is that there's always hope. There's always hope, and there's options. And even if there's uncertainty, already the government put into place these limited levels of relief, which I believe will transpire into better relief, but it hasn't yet. Hopefully it will. So we're in this together. We'll get out of this together. And I'll turn it back to you, Shmuel.
Good. Thank you very much, Shmuel. So I want to say that part of Shmuel and I have been talking about doing this type of a webinar, getting our collective groups together and our information. We quickly jumped to do this today. And part of it is because we wanted to, today's the first of the month. So there's a lot of mortgage activity going on today because now people know that the clock is running starting today. In addition to that, the laws and the CARE Acts and all of the information is starting to slowly get unpackaged. And we're going to try to do our best here, as Shmuel said, to disseminate the information. What was reported today on CNBC, and just to give you a little bit of a glimpse as to the uncertainty, as to the just ambiguity of what's going on, in my mind, they clearly misstepped when they announced that there is a, free forgiveness of a mortgage for at least 3 months. And it's not a forgiveness of a mortgage. It's not that one reporter actually got on the news and said, you can not make your payments for the next 3 months, and then it'll get tacked on to the end. And I don't know, and I'm curious to hear, and hopefully we will figure out what the differences really are between forbearances and forgiveness and modifications and et cetera, as Shmuel started to say. I think that first and foremost, if nothing else, just to clarify what this does and what it doesn't do. And I can just tell you one glimpse. One of the small servicing companies out there, they alone yesterday or today, I think it was today, received 8,000 phone calls of people. Wow. One servicer, small one, received 8,000 phone calls from people on just trying to get an opportunity to speak to a servicing agent to find out if they're eligible and what the eligibility is. So with that, I think the best way to start is just to get, Shmuel, from you a basic definition, description. What do all those terms mean? How does it impact the individual? And what is the best way to get started if you wanted to refinance, if you wanted to look into this?
Absolutely, and it is misleading, and I don't know that I don't believe there was intentional misleading, but the problem occurs when the government throws out certain phrases, and sometimes it's sensationalism, sometimes it's they don't really know the repercussions, and sometimes they think they could force the bank's hands while they can't. Other times, perhaps they can, depending on the scenario. So just to define, I'd like to start off by defining, as you mentioned, some of these terms. So the terms that are being thrown around, a lot of them are called deferment, forbearance, repayment plan, and modification. But the first two, suspension, deferment, and forbearance. Now, I'm going to try to define them, but it's all vague, because what happens is a deferment in its perfect sense, in its very perfect sense, which has not yet been determined that this is what the banks are going to offer, but in its perfect sense is that they're going to defer, completely push off 3 months or 2 months of your payments. The government mentioned 90 days, but not every bank is up to 90 days. Some say 60 days. So the point is to postpone, suspend the payments, and then if there's a wholesome deferment, then it will get tacked on to the back end of the loan so that you literally would not have to worry. Of course, that would be a beautiful scenario, and we hope that will come out. But that would be the best case if it gets deferred, and then the missed payments, you don't have to worry about that at the time of the 120 days. Instead, it gets pushed to the end, and the loan gets pushed out a little bit. And the complication with that is that, in a sense, it's like a modification, because the banks can't just twiddle their thumbs and extend the loan. There has to be some kind of modification of the loan in order to accomplish that. Even if the only modification is an extension of the rate, an extension of the terms and extension of your payment, it's still a modification, which will cause the banks an additional headache, if you will. So that's what a deferment, we hope, would mean. In the meantime, all it means is pushing off the payments. What happens at the end of that time period? Most banks remain undetermined. You have a forbearance, which is pretty similar, except in a classic forbearance situation, it's 100% that at the end of 3 months, let me restate this. the intrinsically in the forbearance agreement, there's nothing else as far as what you're going to do with those missed payments. All the forbearance agreement accomplishes is a little bit of a breather right now, and they'll push off the payments for 3 months or 2 months or however long they agree upon. And then we're going to revisit at that time what happens with the payments. There could be a repayment plan. They could perhaps, in the worst case scenario, require a lump sum payment. Of course, we all hope and expect that that won't be the case, but it's not determined yet. So it's very important to understand that the classic forbearance, it's good for the short term, but it's harder in the long term. And then another possible negative is credit reporting, which we'll get into a little bit later, and although that's not my expertise. Then you have the repayment plan, which I just touched upon. To explain what that is, let's say you have a 3 months forbearance. That means for 3 months, let's say each month your payment was $1,000. So you don't need to pay month 1, 2, and 3. At month 4, you now owe $4,000, 1 for the current month and 3 for the previous. They may issue a repayment plan, assuming you can afford to make the $1,000 payment, and then they'll take the $3,000 payment and allow you to repay it over 3, 6, 9, 12 months. That's a repayment plan. And then a modification is where they say, okay, your circumstances are what they are. You need to restructure your whole loan, and you can afford a level payment, but it's only less than what you used to be able to afford. And therefore, they'll restructure your entire loan as like a refinance. Of course, that is the most loan document intensive, and it's not simple. None of this is simple. That's the basic definitions. I turn it back to you.
Okay, so thank you. I think that in of itself is already a huge distinction between what people think, what people know, and what people should know in terms of what their options are and what they should be looking to pursue and explore. I guess my next question to you is, how do we get here? And in terms of who's calling the shots, is it a federal? Is it the states? Or is it the banks? So who's saying what? Are the states saying different things? And who am I listening to? And I guess let's start with the states. Did the states chime in, and how did they chime in?
Okay, that's an excellent question. And I'm going to first jump to the bottom line, and then I'll go backward. The bottom line, and this goes to my question that I want to address of how does a person opt in? The bottom line is that the servicers are the ones who call the shots. Now, that doesn't mean that they could do what they want. They have to listen in certain regard to the state and to the federal, depending on if they're governed by the state banking department or governed by a federal law, if they're federally backed, for instance, Fannie Mae, Freddie Mac, etc. But the bottom line for the homeowners and for property owners is to know that right now, no matter what anyone says, you need to speak to, check with your servicer, because they call the shots right now, not the government. That said, Governor Cuomo, on March 21st, as part of his executive order, which he's been coming out with a bunch lately, most of which are beneficial to the consumers, declaring any bank that is subject to the jurisdiction of the New York Department of Financial Services shall be deemed to be engaging in an unsafe and an unsound business practice if the bank fails to grant a 90-day forbearance to anyone with a financial hardship as a result of the pandemic. The executive order is already effective and extends through mid to late April. So right there, the banks that are included within the banking department of New York State, which I would venture to say is most of the mortgage servicers, if they're operating in New York State, then, although I'm not 100% certain about this, but most of them are governed by New York State, then they're paying attention to that. While it doesn't say you have to, and it doesn't say shall, it does make pretty strong that it'll be considered unsafe and unsound if you don't agree to this 90-day. And the banks are taking that seriously. They haven't necessarily gotten their act together. Most have told my clients and the prospective individuals that they are offering some kind of 90-day forbearance. But again, the word forbearance only means don't worry about it for now. What will happen in 90 days, we don't know. So that's New York State Governor Cuomo and his executive language. Now, it's also a bit confusing whether or not that applies to commercial loans, because some of the language in his executive order alludes to commercial, but it still remains unclear. In real time, any of the commercial loan banks and servicers that I've contacted and that my office has contacted still say that it's simply too early. They're waiting for guidance. They do have, a lot of them have set up forms on the web pages and phone numbers to call and sometimes emails, but they're across the board undetermined, undecided what the commercial lenders are doing. From Real Deal, based upon the New York Governor Cuomo's executive order, it says that within 10 business days, which should be right about now, state-regulated banks will have to email, publish on the website, mass mail, or otherwise similarly broadly communicate to borrowers how they could receive this 90-day forbearance. That's very welcome news, especially for everybody who's trying to call and can't get through. The banks must communicate with the homeowners. Now, just because the law puts them in that position does not always equal that they are or have, because like Shmuel mentioned, 8,000 calls just now from a small servicer, so they're inundated. So they physically are trying to get on board, but it's not simple. But it's very welcome news to know that, and I've seen Wells Fargo, I've seen countless emails where they already did outreach. It's still not super clear, but at least it gives you the way in. And then I just want to jump, Governor in New Jersey, Governor Phil Murphy put out also a 90-day mortgage payment deferral. What deferral means remains unclear. Let's see. Regardless, anyone who needs to take advantage of a payment deferral, you must call and speak with your lender servicer to understand exactly what they're offering and what it means for your credit, for your repayment terms, and for how long it will remain in place. So if it's 90 days, will it be extended? And I have seen that some banks have mentioned that we'll see in 90 days, and then we'll offer another potential extension for another 90 days. And again, I've seen them talk about perhaps, although I haven't seen it too much, that they'll defer to the back end, but more likely some kind of repayment plan. And then that segues into the CARES Act, Coronavirus Aid, Relief, and Economic Security Act, which is the federal act. Before I jump in, any questions, Shmuel, or just keep it? Okay.
Yeah, no, I guess I'd love to talking about the states. I think at this point in time, we should be talking about federal, and then let's talk Fannie and Freddie as it pertains to individual. Fannie and Freddie and Ginnie Mae represent, I don't want to misquote the number here, but a majority of the mortgages out there. One of the things I can tell you as an aside is that up until Friday, there was an issue with some potential payment defaults with Ginnie Mae, and they had to step in on FHA loans, USDA loans, and VA loans to try to give the banks a line of credit. And it's specific to the servicers of these government-backed mortgages. The payments need to be made regardless. So that means banks will have to forward the payments. Come April 1st now, the banks are going to need to forward the payments to their bondholders, to their investors. When the mortgage payments don't come in, so if you have a forbearance, if somebody's a servicer of government-backed loans and they don't receive the payments from the borrower, they have to forward that money regardless. So either one of two things are happening. Either they can't make those payments and they're in default, and that's one problem, or they're advancing money that they don't have, and they may potentially ruin and risk and put not only a financial strain on their own business, but it will also trigger margin calls and covenants and a lack of liquidity. So the Fed came in and basically gave them a line of credit to do this. So there's a lot of moving parts. And I would say, just to pivot for a second off of the servicing and mortgage payment aspect, this is why people are I apologize for that technical difficulty. I have no idea what happened, to be honest. We were cruising along. We're definitely cruising along. It looks like everybody's starting to scramble and they get their way back, and I appreciate that. It's possible that we crashed Zoom with all of our participants. I don't know. But Shmuel Zand, are you here? I don't hear you. I think I hear you now. Hello? No. Hello?
I see you.
You see me. Do you hear me?
I hear you.
I don't hear you as clearly as I did last time. So am I hearing you through your phone or through the computer or?
Your phone, because I wasn't able to be on the meeting on the Zoom.
I think I could probably right, because it's anyhow being accessed through the Zoom.
Yeah, I hear you now. Shmuel, I hear you loud and clear. Okay. So our users are logging back in. I apologize. I have no idea what happened. There was nothing wrong on my end. I said again, I hope it was us crashing Zoom with all of our participants online and offline and whatever. So the point is that servicers are in a very precarious situation. And part of when the individuals think about their own situation, they have to realize that there's banks and there's protocol, there's regulations, and there's compliance. And all of these are happening in such lightning fast speed that it is almost impossible to have all of the information at hand. And to the extent, to the point of the fact that Ginnie Mae had to come in with this lifeline to servicers, just shows you how real time and day by day things are happening. So as an individual, you have to realize the same thing certainly holds true, which is the information is changing in real time and being slowly disseminated. We went through from Samuel Zand some of the differences between the forbearance and the foreclosure and the modifications and the deferrals and all of those in terms of how the payment is calculated. Now, I think we can talk about just how the Fannie Mae, Freddie Mac, and federal, I guess, jurisdiction will handle it, and then from there, I guess, once you comment on Fannie, Freddie, and federal, we'll regroup in terms of just options and who should be considering this. So why don't you talk to that right now?
Absolutely. Just on your point, interesting. You may have, you probably saw this, but I was dealing with we were trying to rate lock on an FHA loan, and the excellent mortgage banker that I was dealing with said that in all his 20 years of experience, he never saw that they were charging a certain amount of points on the FHA high balance loan, because it's intrinsic in that kind of loan that it's specifically for low income individuals. And nevertheless, because of liquidity issues that you brought up, there was this spike and these extra points, and it was just crazy. It is like the Wild West in some regards, but that's more your area than mine.
Correct. And we have one person who just commented and they want to know if this will change guidelines. Yes, to your point, it will not only change guidelines, it is already causing banks to be restrictive. It is causing banks to change their pricing and altogether try to get out of the government lending business. It's not going to disappear. The government lending business is an important facet of the mortgage industry, but definitely because there are no, right now, Ginnie Mae doesn't buy government loans, they just insure it. Because there are no investors who are willing to buy these loans from the banks because of the risks associated with it and the payment defaults, right now, government lending is, I would say, slowly adapting and changing and modifying their standards on the deals that they want to do and the loans that they want to approve. So I would definitely be mindful to anybody who is either, if you're in an FHA loan, nothing's going to change, obviously. But if you're looking to pursue an FHA loan right now, I would say you need to be extremely mindful of what changes are taking place and how it may impact your situation, your particular, literally from maybe a week or two ago. These things will change, have changed from last week, and will continue to change, I would say, on a daily, if not weekly, if not daily basis. So let's keep that in mind. And now let's just talk about the Fannie Freddie and just
okay. So the Coronavirus Aid, Relief, and Economic Security Act has a couple of pages buried in there that is specifically regarding federally backed mortgage loans, which includes FHA, Fannie Mae, Freddie Mac. And it's dealing with 1 to 4 family homes or condominiums or co-op units. The borrower needs to submit a request and affirm financial hardship. That does not mean there's a document requirement, and it's pretty much makes clear that there are no documents required, but you do need to submit a request, and you need to verbally affirm that you're having financial difficulties as a result of this situation. Now, this Fannie and Freddie tend to be a little more liberal and more beneficial, because it talks about forbearing for up to 6 months and then up to another 6 months for a total of a year. Now, again, that leaves room, because just because it says up to 6 months and then again up to another 6 months, there's waterfalls and there's underwriting by Fannie Mae and Freddie Mac as far as exactly how that's going to come into place, which of course requires you to speak to your particular servicer. And then of course there's also just for your knowledge, in case you want to know whether you should be entitled to some of this, you can look up whether or not, in very easy steps, you can look up whether your loan is owned by Fannie or Freddie. The Fannie lookup is knowyouroptions.com/loan lookup, and the Freddie option is freddiemac.com/loan lookup, with very basic information you can plug in to see if they're owned by Fannie or Freddie. During the forbearance, like I said, up to 6 months, then for another potential 6 months, no fees, no penalties, no interest beyond the regular monthly interest, as if no default was ever made. So in other words, it literally means no negative repercussions as far as fees or penalties during that time period. They also mentioned that no new foreclosures can start for another month or two, and all the foreclosure auctions have been adjourned for the time being, at least in New York. I don't know. This federal didn't talk a lot about the auctions, but I believe that most auctions everywhere have been postponed. But check with your own lawyers about that. Let me just read the Fannie and Freddie other details that I may have here. Verbal confirmation of your hardship should be enough. I said that already. You're not going to have to send 20 pieces of paper at the front of this. So again, at the front of this means that you may have to send more paperwork as time goes on, but at least to opt in, you don't have to. Once people contact the lenders and a plan is in place, credit bureaus will not be notified of later missed payments. So this is a very big discussion, and I'm not an expert. I can only tell you that nothing is clear and nothing is a given. So just because it says that, here's the distinction. Wells Fargo's email and many lenders are saying we are not going to report that you're not making payments, nor will we report that there's late payments. That's a very good news. However, that doesn't mean that they're not going to report anything. We hope they won't, but banks sometimes have a mind of their own. Banks are robotic, banks are inundated, and sometimes there's something called paying as per forbearance, paying as agreed, paying less than owed. There's all different variables, so you can't know unless you get very clear understanding from your own bank, which you may or may not get. But just beware that that's a potential issue, credit reporting, even though the government is clearly pushing the banks that there should be zero negative credit reporting. Across the board, the governments, federal and state, are pushing the banks to make sure of that. But whether they will or won't, only a little time will tell. And then just briefly to touch upon multifamily as it's regarding this the CARES Act. So borrowers could request a forbearance with regard to Fannie and Freddie loans. Then it's a 30-day period. So it's a very short window, but it gets to be extended for another 30 days and another 30 days. So it's two more 30-day periods. So for a total of 90 days, possibly, but you have to make that request before the 15 days in advance. So in other words, let's say you only did one 30-day forbearance period, then by day 15, you need to make your request for an additional extension. So be mindful of that. During that time period, of course, they tie together the help that's going to the building owners together with help for tenants, so that you're not allowed to evict during that time period, no evictions, no late fees assessed to tenants, no penalties for tenants, no notice to vacate, and then you can't evict until at least 30 days after you're done with your forbearance period. So that's the federal. That's the federal in a nutshell. Which again, you'll have to check with your servicer to see whether your loan is federally owned. As Shmuel said, more than half the loans in the country are federally owned.
Yeah, so just one point I wanted to touch upon that you mentioned in reading about the Fannie and Freddie guidance on it. You don't have to provide documentation. So it's just a matter of the servicer telling you that you are now eligible for this forbearance. Is that what we believe? Right.
Yes,
So
you speak to them, and on the phone they will say it's confirmed. They'll probably say we'll send you in 5 to 7 days, either an email or a mailing. The number one thing you can do is follow up. Make sure you follow up, because you do want to receive some confirmation in writing. And as I tell everybody, and you brought up this, you alluded to this, but make sure that you get the name of the person, their ID number, any confirmation number that you can, to make sure you're documenting everything.
right. And another thing that I wanted to point out also is two things. One is you mentioned about the credit impact, and which of course, per what the guidance and the guidelines say, is that there should be no negative impact. But I'd like to say at least a few comments that we've been hearing from the Mortgage Banking Association and people who are familiar with underwriting guidelines and securitization of mortgages. So I'll get to that in a second. And before that, I'd like to say one of the things that makes somebody eligible is that they have to affirm that they have hardship and they've been impacted by this coronavirus. So those are very technical terms. They need to affirm. I would venture to guess, and I'd love to, you gave a great introduction about yourself, how you got into the business, and after the post-horrific Great Depression, 2008 housing crashes, and helping people with their modifications. One thing I would say and caution people is that you shouldn't take lightly the fact that the government and banks are trying to do whatever they can to extend forbearance options to people who are impacted. I think any abuse, aside from the fact that it's a moral and ethical thing, which would certainly hamper and restrict banks, and I'm not a servicer. This doesn't impact me. I'm talking about the good of the banking system. I'm just talking from a macro level. People who take advantage of this because there's no documentation that's needed and there's no confirmations that are needed, not only are they doing a disservice to the banking environment, but I will tell you that from my experiences, banks will eventually start doing investigations and saying what the impacts were and what it is, and you should not take lightly. And I say this because two reasons. One is I was talking to several clients. I mean, thankfully, thank God, we are still doing business, albeit a lot different than we were doing in the past over the last couple of weeks. And with the market changing, with the extreme rate volatility, with the underwriting guideline changes, with the restrictions of working remotely, with all of the impacts that we're facing, with the fact that rates are still at historically low levels, we're adjusting to all these things. And what we're seeing and what we're finding is, as we speak to clients, I have a client who, one of our clients, we're looking for a refinance, and he's already asking about forbearance options on the mortgage that he may be refinancing. So to me, that's a flag. And as a lender, my thought immediately is, do I want to lend to somebody like this? So this is what we're seeing, in real time on the street. Separately, I have somebody who's looking to buy a house in New Jersey who's telling me he owns a property in New York and he plans on going into forbearance. He's already applied. So here's somebody who's, I would say, not only gaming the system, but I think they're doing themselves a tremendous disservice because they don't know the ramifications. To the extent that some of the secondary market investors have come out and have required now that we make all of our borrowers and mortgage applicants affirm, literally acknowledge via some kind of a notarized letter that they are not currently in a forbearance plan and that they know that they may not be eligible for forbearance. And also they need to attest to the fact that their income and employment situation has not changed. And in real time at the closing, is the same as it was 30, 60, 90 days ago from when they applied for the mortgage. So I would definitely say not only from a risk perspective, but from a compliance perspective, and the fact that these banks are understanding that there are a lot of loopholes in the guidance that are being, because again, as we just said, there's federal, there's state, there's local, there's just secondary marketing and just servicers, what they're actually literally able to do. There's so many moving parts. I think that people should not take lightly the fact that this program is meant for people who have true hardships. And to the extent of, and then after this, we'll just talk about what your thought process is in terms of who should be applying. But I guess this is the perfect segue to that. In terms of a credit, I'm no credit expert, and clearly Samuel Zand and I can help anybody on this call or afterwards as people listen in and try to make themselves avail of the programs, including, which I know we're not going to go through, but I know Samuel Zand has prepared a extensive list of servicers and contact numbers aside from just Googling them, so he can make himself avail. He can make himself avail of that. He will avail himself of that post conference privately to anybody who needs that, and for private consultations. But at the same time, in terms of a credit impact, again, I'm no credit professional, but if there are no mortgages being reported on someone's credit report. So right now, if somebody goes into forbearance for April, May, and June, let's call it, your mortgage will not show current. When we look at a credit report, we see January current, check, February check, March check, April check. If you don't have a reporting, you may not be marked late, but you won't be marked current. You won't be marked on time. Nobody knows yet the impact that something as small as that might have. So everyone's going to fold their hands and say, well, I was told by Fannie Mae, I was told by my servicer that it won't be marked on my credit as derogatory. Derogatory and foreclosure are two different things, which we'll get into. And the ability to refinance your mortgage or the ability to do something else, car loan, student loan, whatever it may have an immediate impact. I'm not scaring anybody, and I don't think I'm saying anything out of line, but just keep that in mind. Go ahead.
Are you saying that it's like you're 100%, or who's 100%, but that even though even if they legitimately don't report any negative activity, are you saying that you're pretty sure that they will not report it as being paid the way it's supposed to be, the way it normally is?
I'm from a conference call that I got off of this morning from people pretty high up in the mortgage banking world. It seems as though if you're in forbearance, you will not be marked current. You won't be marked delinquent. You will not be marked current. The impact that may have is unknown, because clearly people are going to have to adjust to the fact that just don't count April, May, and June. But I can tell you from the residential mortgage banking world, 99% of what's happening in the marketplace today is automated. We run our loans through a credit engine, through a pricing engine, through an automated underwriting engine. And if the underwriting engine, which is owned and controlled by Fannie and Freddie, if they cannot determine eligibility or current payment, I don't know what the system's going to do. It could very well be like a Y2K thing where everybody thought the world was going to fall apart, and all of a sudden, came January 1st, 2000, nothing happened and life went on. I don't know what will happen, but I can tell you that there's no doubt that it is not business as usual, and it is not something to be taken lightly by somebody who is strategizing that I do need credit in the short term. I will need to refinance. I want to refinance. I don't know if I still have a job, or I don't know the individual, whether they still have a job or whether they don't have a job. Just take pause. And I know that you're going to speak to the fact of who's eligible and some real hands-on guidance as to what you think people should be considering as they contemplate this. What are your thoughts on that?
Yeah, so I hope I don't have to rip up my thoughts after hearing the bombshell that you just laid on me, that there's no question there will be some difference. Obviously, the hope is that the algorithms of the underlying banks will change to, like you mentioned, hopefully the algorithms will change to reflect that even if there are those no reporting months, but that's not going to be a negative, but that's, who knows? Who
Right.
knows? But basically what I would suggest, and this is really, everybody has to make their own decision, but it goes without saying that if this is not something you need, plus you mentioned about what happened in the modification days of 2009 and 10. So while, and you're 100% right, while there were plenty of people that jumped on the bandwagon and got approved, number one, they all had to sign documents that affirmed, which is swearing under oath that your financial situation was the way you said it was. So in order to get any modification, they had to do that. And it's likely that there'll be some kind of documentation here as well. And even if there isn't, you're still affirming, which is a swearing under oath in a sense, that there is this financial difficulty. Who could quantify what a financial difficulty is? I don't know. And everybody knows themselves right now. But the flip side is the amount of investigations that were triggered. You know, I'll tell you, my previous firm, when I did modifications, they said, no matter what, do it all you want, but we're not advertising. We're not advertising because there was so much scrutiny surrounding modification companies. And for good reason, there were many scam artists out there. But I also want to speak to the fact, and this is a little bit of a side note, it's really a scam. I really believe this. I'm going back to my modification days, which I still do till today. When the banks say you do not need to hire somebody to help you, banks make things very challenging. And it's not about emotions. It's about robots and algorithms. And in the beginning, the first few years, I can't tell you, over 50% of my modification clients came after they tried and tried and tried and tried to do it on themselves, on their own, after submitting documents after documents after documents. So don't take it lightly if a bank says, oh, you don't need to hire somebody. Now, of course, if you can speak to them and you understand what they're saying and it seems simple and you can follow through, then perhaps go ahead and do it on your own. But be cautious. And as soon as you start getting like pushback, the likelihood is that the pushback will continue until you get professional help. But now, turning back to the question, what I was saying to people, what I've been telling people, a few things. Number one, it's April 1st. But most residential mortgages have a 15-day grace period. Shmuel, tell me if that's not correct. Some maybe 10 days, but most, okay. You have a 15-day grace period where nothing happens in the middle of that time. Let me take a step back. Some people have automated payments, and some people, a fellow asked me, I have it set up where they take out twice a month, and this way I shave off 7 years at the end. Give yourself a free refinance by just cutting out that nonsense right now. Now it's survival mode. So now is not the time to be shaving off 7 years at the end. Cut it out. I'm not saying to cut out your automatic payments if you don't want to, but now is not the time. If you want to do yourself, your pocketbook, a little bit of a favor, then simply opt out of those additional payments so that it could relieve you a little bit of the stress of the current, mortgage payments that you've made. And then as far as who should opt in, so I was saying like this: if you have, I'm sorry, I was in the middle of saying that it's April 1st. So you have a grace period to April 15th. Every single day or two, these things keep evolving. And I had a client spoke to the bank one day, and they said one answer. The very next day, the bank gave another answer. And on that same phone call, the rep said, tomorrow is probably going to be a totally different answer. So that's how fast things are moving. So it's now April 1st or 2nd. What's the 1st? So wait a week or two before you decide whether you're opting in or not. There's no reason to jump right now. You can even wait close to a month, because after day 15, you get hit with a relatively minimal penalty, which there's a strong likelihood that they'll waive the late fee, although don't hold me to it, but there's a likelihood of that in this climate. So you have 15 to 30 days to wait and see what happens, and to get in touch and to hopefully get emails from your own servicer. So as a practical matter, you don't need to rush into it right now today. Wait and see over the next few weeks what transpires. Also, if you're somebody that has 6 months of reserves and you're just sweating it out right now because you don't know what's going to be in the long run, nobody knows. And understandably, you're nervous. And especially if you're somebody that always makes every payment on time, every time. But if you're that type of person that has the 6-month reserve, credit Dave Ramsey for having the 6-month reserve or more, in any event, so you should make this month's payment, no questions asked, because there's too many unknowns and too many potential negative ramifications and not enough relief in the mortgage relief program. So make your payment, and then we'll see what happens over the next few weeks. Maybe it'll get better, and we'll know what happens on the end. You have the credit question. You have the question of what's going to be after 3 months. What are you going to do with those payments? Will there be a repayment plan, etc.? If you're in the 3-month category where you have 3 months of reserves, so then it's a little bit trickier, but you certainly can wait the 15th. I would recommend wait the 10 to 20 days and reassess it at that point. Call your servicer then, and then feel free to call Shmuel or myself to see what's going on, what it means, what they told you. The key is to understand what it is that they're telling you. I've had many people, friends and family, send me the emails, send me the transcripts of what the banks are saying, which is very vague across the board for a simple reason, because they themselves don't know. It's not intentional. They don't know what they're doing. So hopefully there'll be more clarity. So even if you're at the 3-month, where you're really running lower, but you still have what to hang on to, then wait a little bit. And if you're paycheck to paycheck and you're month to month, then my personal recommendation, it might be against what every mortgage broker or banker would say, is just go for it. Just go for it. You need to have money in your pocket. You need some peace of mind. God willing, the same way that is current mortgage relief and the same way that in 2009 was the modification, the entire society is not going to go down, which is hence why the government gave this $2.5 trillion or however much it was, I'm sorry for misquoting, package, because they're helping everybody. So the banks, I mean, if in 3 months' time they demand a balloon payment upfront of all 4 payments, that's not going to be good for them or for us. So chances are there will be some better option at that time. And chances are your income and your business and will all hopefully be beyond this. So if you're in that rut where you're literally not sure what to do, I think you should just call them up and say, I'd like to opt in, hopefully get confirmation that there'll be no negative credit reporting, and you take it 1 week and 1 month at a time. That's pretty much my recommendation as far as that goes.
So just to talk about the logistics of it, and I think with this, I'll let you conclude with any parting remarks. The logistics are, if somebody calls their servicer, they wait online, they speak with somebody finally, and then they ask for the deferment and those payments. Let's say they get a 3-month deferment. Those payments, what happens after those 3 months? It's technically due.
Yes, technically. So that's the big question. The answer is some banks will tell you that some banks will clearly say, we are giving you a forbearance and in 4 month time, it's due. Okay. As of now, some banks have been saying that. Other banks have been saying more liberally, listen, we understand that you may not be able to make those payments in 4 months from now, but we did not yet formulate what will happen in 3 or 4 months time. The hope is, not as likely, but the hope is that they'll put it at the back end. That's a possibility, but it's really not sure. I think my opinion, which is really not worth much, but my humble opinion is they're going to offer repayment plans, which means that as long as you could afford your regular mortgage payment and a little bit, I mean, they already offer repayment plans nowadays, as long as it makes sense. So of course, if you can start making your normal payments and then repay after 3 months, then they'll issue you a repayment plan for those additional payments. And then you can also, if really things are pretty bad and your income took a strong dip, but you do have some level of income, then you go through the modification process, which hopefully they'll streamline. Hopefully they'll offer it more liberally than what they have over the past few years, because there's a lot involved. But that's another option. And if you modify, then you could perhaps reduce your interest rate and roll all the payments into a new bundled mortgage modification.
Right. So that's a separate modification. That's a completely different status and different than the forbearance that people are being offered now. I can tell you that while you were talking, I was just looking at an email that I received from one of our servicers, one of the banks that we've sold loans in the past. I will not say the name of the bank because I think everybody should do their own due diligence as it pertains to them. But what they wrote is, per the CARES Act stimulus package made law on March 27th, borrowers who are impacted by COVID-19 will automatically receive up to 6 months forbearance plan if qualified. That's what they wrote. They also wrote, and they said this is what they will be doing effective immediately, and likely most other banks. And then they wrote, borrowers must fill out a loss mitigation application with supporting documentation to qualify for financial options. That's what they're requesting of people upon the phone call, day one, when you speak with them. So there's a lot of, I would say.
Excuse me, is this anything to do with Fannie Freddie or its regular state?
This is a conventional bank. This is a bank.
It sounds similar to the Fannie Freddie, who was talking more about the long term.
Correct.
But so there's positives and negatives in what you're saying. The positive is the 6 month to a year. Did you mention to a year? Or you just mentioned 6 months.
6 months.
Okay, but the 6 month is much better than 90 days or 60 days.
Correct.
But
But they're implementing a request for a loss mitigation application on day one. So they're not even going to wait. They're not even going to wait the 90 days to address what somebody's going to do. They assume, and people have to take this into consideration, they're assuming somebody who's calling up cannot make payments today, and it is unlikely that they'll make payments in the future. So for me, the big concern is, and just to start wrapping up, the practical advice that you were giving is, it's April 1st. People do not necessarily need to make their payment today, even though they may be on auto pay. They should cancel that if they're uncertain, if they're on the fence, if they're in question on their employment or financial situation. They should certainly defer, for lack of a better word, and punt and pause for at least 2 weeks to see what they want to do and if anything changes in the world and in their financial situation. Another practical advice, which you may or may not have thought about, is everybody's slamming the servicers today. If I call in 2 weeks from now, it is possible that the call volume will be a little bit less. So if you're willing to, and as you alluded to, you may, if you don't make your payment by the 15th, you're certainly not reported, but you may have to pay a late fee. I doubt, and nobody should quote me on this, I doubt banks will charge a late fee given the environment. So even if you want to take, liberty and say, I'm willing to endure the late fee just to give myself a little bit more time to go to the 30th of the month, just to strategize and figure out what I want to do. If nothing else, just to give the world and the banks time to figure out what they want to do. I think it would be, and at least this is my professional opinion. I'm not in the modification world. I'm not an attorney. I'm not a credit expert. I'm a regular guy who's been doing mortgages for over 20 years, who's seen this. But I would say it would be, if somebody, and I have said this to people, anybody who's calling me over the last couple of days, I said you'd be doing yourself a huge disservice by taking the forbearance right now. Because certainly if you're forced to affirm anything, to fill out anything, to agree to anything, that the banks don't even know what it will look like in a few months from now, I don't know why you would take that risk upon yourself. So I agree with your advice in terms of just snoozing it. That's what I've been telling my own clients. And I think also that the biggest takeaway here is we are professionals. And there's a credit expert who's on the line with us, Sam Lunger, who has been very helpful to us and to some of our clients, who's chiming in terms of just saying.
Shout out to Sam. I appreciate the little back and forth on LinkedIn this morning.
Yeah, so clearly, and what I would say is that we are professionals, and we are, I would say, seasoned in our industries, and we are overwhelmed with the slew of information and potential implications of what's going on over here. So even more so, an individual, a consumer, a homeowner, who's not only forced and faced with just being in seclusion and the realities of what's going on with the virus and the impact that it may or may not have on their personal, medical, professional, and fiscal lives, how are they supposed to know? So my big advice and takeaway before I turn it over to Shmuel here is to say, reach out to competent professionals who have a little better understanding, who are on the front lines, who have a little experience, certainly the people who have been around the block, who can give you a little bit more information that you may have on your own. Clearly, a lot of the legwork will need to be done by the individual because most banks won't talk to us on behalf of the homeowner. But eventually, at some point, depending on what their strategy is, if they retain professionals to help them, that's when they can get professional advice. I'm not saying they need that on day one. I'm definitely saying that pause, don't overreact right now. I'm not saying the worst is over. I'm saying, to quote President Trump, it will be a very painful next 2 weeks. Let's just breathe a little bit. Let's just, organize ourselves and our strategies and our thoughts, get some information, and then revisit it at that point. Any parting thoughts on your end?
Yeah, so first of all, I agree with everything you're saying. I think that the only thing I would say is everybody comes from their vantage point. So when some people call me and I talk to them about their income, and then they ask me, well, what about my tax ramifications? And I'm like, listen, I'm not a global. I'm dealing with your mortgage and your modification situation. So I can tell you what income, what it looks like based on your income that you might get approved for. Obviously, I'm veering off. But so in this case, I think I see that the mortgage brokers are worried for the client's ability to be approved for a mortgage in the future, a refi, a mortgage of any kind. And that's very commendable and important. My main concern is the homeowner being able to get the mortgage relief that they need, and I stress need with a capital, caps, NEED, and less about the credit. And believe me, I've seen many people over the past 10 plus years who credit was shot. But you know what? They got beautiful loan modifications, and I'm not suggesting or recommending it, but for the person who has no choice, there are options, and modification is not simple. But what I'm saying is that with God's help, there will be a conclusion and resolution. There are many resolutions, many beautiful modifications that happen. And I think that you won't even have to go to modification route, because I have a hunch that after 3 months, the banks will set up something like a repayment plan, or to put it on the back end, because they don't want to be busy with a lot of shenanigans and they're going to have no choice. But I just want to end with an anecdote, which is apropos for this time. I want you to think back to when you were a child and you were riding your bike or a tricycle, and your dad or mom took off the training wheels for the first time. And you're like, Dad, what are you doing? And he's like, don't worry, I'm going to hold it back. And Dad held it back and you started going. And next thing you know, your dad let go and you're riding on your own. And you turn back and you say, why'd you let go? I can't do this. And Dad says, what are you talking about? Look, you're doing it. You're doing it, no problem. And from then on, the boy, us, were able to ride our bike on our own without an issue. I think now, perhaps, God is telling us he believes in us more than we believe perhaps in ourselves. We have challenges. It's so much, like I said in the beginning, there's uncertainty is the number one word. It's uncertainty. But like that lesson that we learned from our dad when he let go, it was, I believe in you. You can do this. And when you do, you'll get even better and you'll be able to ride on your own. Number two was that just let go. The kid had to let go and the father had to let go. God wants us to relax and to let go of our fear, of our angst, of our worry, of our control, because God knows we see now we have no control. We don't know what's flying. And then the only difference between the parable and the reality is that in the parable, you're literally letting go with no more support. In this case, God says, just let go of your control and have support and trust in me, and it will work out. And this is it. We're here together. We're in it together. As you can see, we set this up, and there are many great people out there. and including the United States of America, including the banking department. Everybody's trying to keep everybody up, standing together. And God willing, you just have to take it one day at a time. Every text I send somebody is the same answer. One day, day by day, day by day. That's everybody's answer.
Right.
So let's take it day by day and not worry about a year from now or a month from now, one step at a time. And we will get through this together. And I just want to mention that you can connect with me on LinkedIn, Samuel Zand. You can email me at samuel@zandlawoffices.com, or Mendy, my assistant, is mendy@zandlawoffices.com. My web is stzlaw.com. And I want to thank Shmuel. You're a stellar individual, and you've been at the forefront of keeping all the news that comes out in the entire mortgage industry flowing to our clients and the people. So keep up your great work. It's been a pleasure. I appreciate it.
Appreciate that. Same with you. I'm not going to top your parable. Beautiful ending to a very delicate and complicated situation. Thank you very much. And again, on behalf of Samuel Zand, we wish everybody continued safety and health. And we will get through this. And we look forward to good times ahead. Thank you all for joining us. We really
thank you all for joining.
All platforms who have made the effort. Appreciate it.
Appreciate it. Thank you.